Hey folks, Dan Frio here with your midday report. I'm going to start making this your mortgage minute. But as you guys know, I don't talk just for a minute. So let me go over a midday report. This is good news, actually great news for anybody out there looking for a mortgage because rates eased a little bit today. But I'm not saying overall rates are great, people, because I have people saying, "Oh, Dan, the rates are better, but they're still stink." And I have to agree with you on that part. But the good news behind all this is we see the MBS market right now, it is up 30 basis points. Okay, that means that's good. So we're going to probably see rates drop about an eighth because of this. So that's the good news there. Well, what's really taken a toll on a lot of this stuff? If you have any money in the market, you ain't going to like this part of it right here. There was a big ad up there. I don't know why this ad, I can't get rid of this ad. The Dow Jones is down 1,100 points. 3%, 4% down on the S&P, almost 4.5% down on the NASDAQ. And so that's the reason people are getting out. Like I've been saying, people get out of stocks. I wish I would have. And they move it over to the MBS market. So here's basically, I'm skipping ahead. So that's what's going on right now with the MBS market. Again, as this chart goes up or moves up, we see a reversal or a flip-flop with mortgage rates. They're coming down. All these little oranges, these are all the lenders that we're set up with that have repriced or lowered their rates today. And you can see down here, there's 29 of them who've gotten better rates today, and none have raised their rates. So that's good news there. Some good news or news that we have, there's a ton of building permits. So the building permit news was out today. Permits are up big. Housing starts, not so well. And completions, terrible. All right. You figure out the why behind all of that, but it's just the supply chains. So when we have a lack of all these houses being completed, there's a shortage of homes, guys. So that's it for right now. If you got any questions, hey, Mr. Rogers, thanks for blipping us. As always, thanks for the thumbs up too, man. But I just wanted to, I didn't realize this today until I was just doing the mortgage minute that I was trying to put together right now. I didn't realize the stock market was down this big. And then I've been following, basically this is what I follow all day. I don't follow the stock market. So I was wondering, with the news out today, there's really not that much there. There's no meat on the bone there. So why are mortgage rates, coming down? And then I clicked over to, down through here, these are all my alerts. It says, well, they're down because of massive sell-off in stocks. So then I went over here just to check the headlines, and it's like, are you kidding me? Okay, so that's that. If you got any questions, please say your piece now. Otherwise, I'll just move on because it was just the mortgage minute. But while I'm here, I figured I would just answer any questions to those out there that do have a question. So wow, another day, Marcus. I know. In my video this morning, it was just like, is this ever going to be over? We had great times for 2 years. I won't say great times. We had good times in the housing industry for 2 years, even the stock market for good 2 years. And I should have saw a lot of this coming, especially in the stock market piece of things, because that's easily adjusted. You just don't like something, or you want to get out of the market, you get out. Housing's different. It's a long-term effect. So that's what I'm saying, guys. There's flexibility in all this. I'm working on a video right now that I'll be posting tomorrow to give you the correlation between mortgage rates, recessions, and housing prices, housing sales. That's what I'm trying to work on right now to give you guys the correlation between that. Because the number one question everybody asks me, Dan, what do you think? What do you think rates are going to be? What do you think about the housing market? Well, I still don't, and there was a chart here. I don't know if I still have it up. The housing market, even if you don't plan on selling for the next 3, 5, 7 years, is it still a terrible time to buy? That's up to you guys. Rates are going up, where they're going to be. But my condensed version of this is you still have to compare in your area that you're looking to buy rents versus buying. Okay, then analyze that. We'd be more than happy to do the numbers for you. If it's a lack of a down payment that you have, maybe we can help you there with the down payment assistance programs. You just want to kick the tire, ask questions. That's why we have a chat button. We have the 800 number to call us and everything else. So that is my mortgage minute. I'll try to keep it to a minute. Please don't forget our live event tomorrow evening, where we're going to talk about how much can you afford. And affordability is coming down on a daily basis, unfortunately. But this was the shocking news for me today, and it's continuing to go down. I came on here, it was down 1,100. Now it's down 1,200. So when is the bleeding going to stop there? I don't know. But the silver lining behind all this is basically right here. Mortgage rates are getting a little bit better, for what that's worth. And you can see a lot of the trading taking place over here, which is pretty cool. So I notice a lot of people subscribe to my newsletter after watching today's video. So if you want to subscribe to my newsletter, it's free and it's down below, and it provides you most of this information that I go over, but you don't have my personality in the background. So I hope you like my video. If you do, please show us just a little bit of love. Give us a thumbs up. Click the thumbs up button real fast before you leave. But if you have any questions, speak your piece. And I don't want to talk. There's a comment on here. I'll post it. Give me my thought. SQQ is a more safe short-term market. Put options have way too much risk. I'm not going to really talk about the stock market here. I appreciate your feedback, because I do bring it up, but I've watched the stock market. Why do I watch it? Because again, when you're looking at investments, here's the backdrop of a lot of this stuff. When you have money, investors have money. What are they going to do with it? Well, they're probably going to put it in stocks, which is right through here, or they're going to put it in bonds. In the bond market right here, as we see, it's rallying today as the stock market's crumbling. So this is the normal correlation that you see. It's not the correlation that we've seen over the last 2-3 years because of all the stimulus money being pumped in. This is the correlation we have. You usually have two investment choices you can do. You can do stocks, you can do bonds. Normally, both markets don't rally at the same time. Okay, so that's what we've seen for the last 2 years. There is a disconnect. It's going to be how big the disconnect that's going to be, I don't know. I truly don't know. But yeah, we got another one. Stock market's crashing. So that's taking away a lot of our wealth, all the way down to those that just might have, a small little savings account or an investment piece with your company. But we're all getting killed right now. So without further ado, let me answer some more questions. But guys, I'm going to put money in the cool. Let's see what's happening here. Do you think it eventually crash housing market? I don't. I'm still out on a ledge there, and you guys are going to say I'm FOMOing real estate. Here's what I'm going to say. Is it going to come back? I was just looking at some charts for my next video I'm going to do. What I've been analyzing is rates and housing values and so forth. We usually don't, other than like 2008 or 9 or whatever, you usually don't start losing major money on your home. Okay, so let's look at it over the last, use my analysis. I always say, if you're not going to be in the house for 2, 3, 4 years, 5 years, don't buy. Don't buy. I'm telling you right now, don't buy. Okay, but if you're going to be there 3, 5, 7 years, okay, it's like the stock market. I wish I would have sold. I didn't. 3, 5, 7 years from now, where's it going to be? Probably, okay, maybe it's equal to or whatever, but I'm getting dividends. I'm getting other investments. So on your house, it's a little more long-term. So if you're not going to be in the house, 3 years would be my break even, all, that I'm not going to be there for 3 years. Don't buy. Just do not buy. But once you see over 5 and 7 years, I'm going to show you these charts tomorrow, you're going to see, even if you buy at the top, if we have in your case, we have a 10, 15% correction, okay, it goes down. Over 5 years, even at normal appreciation of 3, 4, 5%, you're going to be back above where you are. So if you have any inklings of not being in the house for 3 to at least 5 years, don't buy. Okay, I'll say that right now, and I won't keep dwelling on that. Same thing with, the stocks are easier to get in and out of where homes aren't. So if you have any other questions, I'd love to answer those. Same couple people are asking, real estate is such a hard asset. It does well in an inflation environment. Real estate is a true value. I don't know the person, but I greatly appreciate the support there. We don't know what's going to happen. I'm giving you my feedback, and that's the data I'm going to provide you tomorrow. So again, if you look at a 10, 20, 30-year chart, house values normally go like this, okay? You're going to see this, and then it comes down. And you're going to see this, and it comes back up. So unless you're buying at the top, usually within 2, 3, 4 years, it'll come down in a year or two, and then it goes back up to normal levels in 3, 4, 5 years. So, it might take you if there is a reversal in prices, it might take you 3 years to get back to the price that you paid. But again, I'm telling you right now, if you don't plan on being there at least 3 to 5 years, do not buy. So if you have any other questions, please let me know. What's the market down now? It's down 1255. MBSs are, we got a nice little green cell here. What this is the MBS market. I'll explain it again real quick. This is the bonds that trade on Wall Street. It's the mortgage-backed security bond. Okay, we monitor this because the yield on this thing is the biggest component of your mortgage rate. As this goes up, the prices are going up, rates come down. Okay, let's see if there's any other news down here that I can go over with you. Got to put my old man glasses on and see what early read on existing home sales in April. These are all the things I follow, and this is in the background. Let's look at this while I'm live, and if you got any questions on here, let me know. Early reading on existing home sales is in for April based on the public available local realtors. Seasonally adjusted annual rate of 5.57 million in April, down 3% from March preliminary pace, and down 6% from so we have some existing home sales starting to show some cracks, which is a good thing because so many people are bidding on these homes. Why are the prices so high? Well, again, if you have, it's like the Mona Lisa. You have one. You have all these people that potentially want to buy it. That drives up the prices to where it is. So the more Mona Lisas you have, the more homes you have, the less competition and more equilibrium gets put into everything to bring the house values to the true house values. Yes, what we've seen over the last 2 years, crazy, but there's a reason for it. You know, excess monies and all kind of the other stuff. And I agree with historically the lowest rates ever in history. Okay, so where do you think rates would go from there if it was the lowest ever in history? Well, there's no other way but up. So how far up those are going to go, that's what I try to educate you guys and inform you on a daily basis, the best of my ability. Because if you saw in the background what I do on a daily basis, tracking all these things, you would be, okay, the guy kind of has an idea what he's talking about. And I also have 30 years in the business. So this is all the stuff in the background that I do to make sure you guys are informed. You're informed about the real estate market, especially the financing piece of the puzzle. So I want to thank you all for watching. Please, reply or go online tomorrow night at 7 p.m. I know it's late, but we're going to talk about how much can you really afford in this market. So thanks for watching, guys. God bless. Have a great day, and I will see you.